Hey everybody, I just got a really good question via TikTok in a DM asking, if you could start all over again, what would you do differently as a trader and an investor? Now, you're gonna hear people say this all the time. I would have bought Bitcoin and as much as I could have, but we didn't know back then that Bitcoin would go from under a penny to over 50,000. So those kinds of videos aren't very helpful because sitting here today, we're all trying, okay, well, what's the next Bitcoin? What's the next Bitcoin? And we're putting all of our hard-earned money into these random cryptos and these random growth stocks that could be the next Tesla, and it might be the next, and it might be the next. And a lot of the time, these companies, maybe they have some growth, maybe they go up a little, but they don't do anything near like what Tesla or Bitcoin or, or these other growth companies have done. So it's an unfair kind of like hypothetical. Knowing now, I don't usually like those kind of questions because they're unrealistic. It's not really helpful. However, there are things that you can still learn from my mistakes. So Bitcoin and Tesla aside, some of the things that I would have done differently is I would have, and I say this now in a lot of my TikTok videos, take your profits from your trades and put them into your growth stock investments and your dividend paying stock investments. Reason is, that's where the wealth is going to be created. You're not going to make millions as a day trader or as a swing trader unless you have lots and lots of money to make those trades. So here's an example. There's a stock that's $5 a share and you buy 1,000 shares. Costs you $5,000. That stock goes from $5 to $5.30, maybe in a couple days, maybe in a week, and you sell and you make $300. So when people say, can I become a millionaire trading stocks? I give that example. A, do you have $5,000 to trade with? Most people say, no, I don't. So you're gonna be trading with even less, which means you're gonna be making even less. So it's very unlikely that you are going to be a millionaire from your day or swing stock trading. Even if you were to double the money on a trade like that and say I'm putting in 10,000 and I'm buying 2,000 shares of a $5 stock that I want to go from $5 to $5.30, you've still only made $600 on the trade. Can you become a millionaire doing that? I don't think so. You can make your money though as a long-term investor in dividend-paying stocks and in growth stocks. People always ask if you had to choose one or the other. I don't answer those questions because I think those questions are stupid. The question shouldn't be one or the other. There shouldn't be a question. The thing you should do is buy both. You should buy both for times like economic downturns. You want to have your tried and true blue chip stocks that pay you dividends, that have weathered these storms before, that don't go down as much as the growth stocks do. And then you want your growth stocks for really strong bull markets when they're on a tear. And you've still got your dividend stocks churning away slowly, adding and adding and adding. What I always say to do is take your profits from your day trades and put them into your investments. A percentage, obviously not all of it. If you are a self-employed stock trader like myself, you need your profits. Say that stock I just gave you an example of, that purchase of a $5 stock that goes to $5.30 and I sell it, I use that to pay my health insurance, I use it to buy my groceries, I use it to pay my condo fees, my electricity bill and stuff like that. At a certain point though, once you've paid off all your bills, you want to start taking some of that money that you make and putting it into your growth stocks and your dividend paying stocks. I didn't do that in the early stages. I just had my 100 shares of this company, my 250 shares of that company, and they were paying a pretty nice dividend, and I was building a very slow position in these companies. What I should have done many years earlier was take all the profits that I was getting, because I was living at home. My mom had moved to New York and I was living in her apartment, so I wasn't paying any rent, I wasn't paying the condo fees. She was just like, you stay in that place and you save as much as you can, because when I come home from New York, I'm kicking your ass out and you need to have money so you can afford to either rent a place or buy a place. I didn't know back then how long. She ended up staying in New York for quite a while. I didn't know that. So I was just hoarding cash, putting it in the bank account. That was dumb. What I should have done was take every profit that I had, since I wasn't spending money on rent or condo fees or anything. What I should have done was taken all those gains from my day trades, from my swing trades, and just dumped as much as I possibly could have into stocks that I was already investing in. Stuff like Apple, stuff like Tesla, stuff like Johnson & Johnson and Procter & Gamble, and just amassing a very large position in these companies pay pretty handsome dividends. So even if the stock isn't a runaway train like Tesla, I still own Tesla. So I'm benefiting from the insane growth that Tesla's having over the many years. And meanwhile, I'm slowly adding to my own position. So not only am I reinvesting my dividends, so that's helping, but I'm taking my gains from my day trading stocks and my swing trading stocks, and I'm putting them more into Procter & Gamble, more into Johnson & Johnson. So I'm building a bigger and bigger position both ways, through dividends and through taking my day trading and putting my day trades into those. I do that nowadays, and I started doing that a while ago, but I wish I had done that really right from the beginning, because now I would have probably had several hundred, if not thousands, of shares in these dividend-paying companies, and in some other companies as well that were growth stocks that really benefited from me investing ages ago and just holding. I do that now. I didn't do that in the very beginning. I wish that I had. So from the investing standpoint, that's one of the things that I wish I had done differently. The other thing that I wish I had done differently as a trader is cut my losses at the very beginning. I didn't do that. When I first started trading, I kind of broke off on my own as a trader in around 2011. 2011 is when I left the gym and I started going in as a full-time trader. Prior to that, all the way back to 2006, I was investing in stocks, and I wasn't really trading because I wasn't comfortable. I didn't know much about it. I would just buy a couple of things and hold them. I wish I had known back then to cut these losses when they started dropping significantly, because I didn't. They were garbage stocks, and I was listening to strangers, which is something else that I wish I hadn't done. I was listening to strangers at my gym, which is the equivalent to listening to strangers on social media today. You hear a random person say a random ticker symbol, and you go, well, he mentioned it, so it must be good. I'm just going to randomly buy it. That's why I don't do call outs, and that's why I don't like doing call out videos, and I don't like following people who do them, because they have done their research maybe, and maybe they haven't. And maybe they have a plan that you're not privy to. Maybe you don't know their plan. And maybe they've been trading long enough that they can recognize, hey, I did all the research in the world and it's still going down. I'm cutting my losses and I'm getting out. Where you, the inexperienced trader, or me, the inexperienced trader back in 2008 and 9 and 10, didn't have that experience. Couldn't cut losses. It was too hard. Because what do you want when you buy a stock? Well, I want it to go up. I want it to go up. Why isn't it going up? I'm going to hold. And then you get like stubborn, no, I'm not selling, I'm going to hold the stock, I'm going to hold it. And it just keeps going lower and lower to the point where you're sitting there going, damn it, I got a 10% loss, 15% loss, 20% loss. Well, I'm not selling now, I'm not going to lose 20%, 40% loss, 60% loss. So one of the things that I wish I had done is cut my losses sooner. The last thing doesn't relate to the stock market, but is of a investing, it's in the world of investing, which is real estate. I listened to a broker friend, person that is a family friend, and years ago. So when I was in my mom's apartment, my mom was in New York. A studio apartment came up for sale in her building, and I had been hoarding cash. Remember, I was hoarding cash. I wasn't investing. I didn't know to invest back then as much as I should have been. And I was just taking all the money that I made from my minimum wage jobs. And since I didn't have any overhead, I didn't have any rent, didn't have any mortgage, condo fees, whatever, that money, and I was working double shifts a lot of the time, ended up being quite a bit. Just sitting in a bank account, earning next to nothing in interest, but it was there. It was there for me to either buy a home eventually or do something down the road. And that's when I had an idea. I thought, you know what I should do? I've got all this money sitting in this bank account. I should buy an income property. And I should take that income property and rent it out now while I'm living in my mom's place. And when my mom comes home, I'll just tell my tenant, hit the road, and I'm moving in now. Brilliant. So I call this family friend that we know. I say, it's a studio apartment. I want you to come look at it. It was $80,000. I can't even remember when, but maybe 2010-ish. It was $80,000 for a studio. The condo fees were $300 a month. And this is, by the way, in Washington, D.C. So he comes in and he's looking around and he goes, it's not in great condition. It was livable, right? It was move-in ready. It just wasn't fancy. He was like, it needs a fresh coat of paint. It's a little dirty. You know, the appliances are cheap. $80,000 for a studio. And I was like, yeah. And he was like, you're never going to get that money back. A studio in Washington, D.C. will never go for more than $80,000. You were buying in at the absolute height of the market. And even as a rental, you know, 10 years from now when it's time for you to sell, you're not going to make more than probably 80. You're not going to ever be able to ask more than 80,000 for this. And if the markets pull back, you could end up even losing a little bit of money on the sale of the home. And it's a studio, so you can't really rent it for much. And after you pay the condo fees and the property taxes and all that stuff, you're not going to be generating a lot of income. You'll be generating some, but not as much as maybe you hope. So I don't recommend it. And I thought, I don't agree with you. But I was much younger, right? I was in my early 20s. He's a real estate professional. How am I going to tell this guy, I think you're wrong, without being able to back it up with anything? All I knew was the prices in Washington, D.C. for homes had been going up astronomically since I was a kid. So why would they stop? Why would they stop? There are areas in DC that are going to be gentrified with, you know, gentrification is terrible, but it's going to happen anyway. There are going to be areas that are gentrified, and there are going to be more areas that are gentrified. And DC is going to continue to increase in price. That was my thought, but I didn't know how to make a case. But I was listening to these experts, and I said, you know what? They're telling me not to do it. I'm not going to do it. So I passed up on the studio apartment. Now, about maybe 2 years ago, I got a flyer in the mail for a studio apartment, and it was the same one. And it was for sale, and it was $190,000 for a studio apartment for the same one that I had looked at 10 years ago. And by now, over the 10-year period, the rent for these studio apartments had practically doubled, and the condo fees had gone from, I think, 300 or 350 to around 450. So the condo fees had increased a little bit, which means the property taxes probably did as well. But it was 80 grand. It was selling for 190,000 around 11 years later. I think about that a lot. Now the question is, well, why don't you just buy one now? Well, because it doubled in price. I could have bought it when it was 80, and I wanted to. I was just listening to all these experts tell me not a good idea. And so that is a humongous regret. And about maybe 6 years ago, I wanted to buy an Airbnb in West Virginia. West Virginia is around an hour and a half to 2 hours from DC, depending on where you go. And again, at the time I was living with my girlfriend, so we were splitting the rent, and I still had a decent amount in savings. And I was looking at cabins in West Virginia, a cabin for me, like a weekend place, but also something to Airbnb. And I just couldn't pull the trigger. I just was, $80,000 for a cabin in West Virginia. I don't know. And what if it needs work and I'm going to have to hire someone? And I was talking myself out of it. What ended up happening was all of the super wealthy people here in DC realized, hey, my house in DC is $1 million. I can buy 3 or 4 or 5 houses in West Virginia, and it would cost half of what my house is in DC, right? They could buy 3 or 4 cabins in West Virginia, and it would cost under $500,000 to buy 3 or 4 of them because these cabins were so cheap. Why not just buy 3 or 4 of them and put them all on Airbnb? So all of a sudden, the home prices in West Virginia just started going through the roof. So what was an $80,000 cabin just 4 years, 4 or 5 years ago, is now selling for $350,000. So sometimes, we don't know. I didn't know that condo, that studio apartment was going to go from $80,000 to $190,000. I didn't know that those cabins in West Virginia were going to go from $80,000 to $350,000 in a 4-year period. I didn't know that Bitcoin was going to go from under a penny to over 50,000 per coin. We don't know these things, which is why, full circle, these kinds of videos aren't always helpful. However, Maybe there's something, like I said at the beginning, that you'll be able to learn from this. Maybe it is take a little bit of a chance on some real estate if you've got the money and you can afford it and you're in an area where the home prices are appreciating. Definitely take your profits from your day trades and your swing trades and put them into the safe long-term investments. That's where the big lasting wealth is built, through these compounding of stocks over the long term. And buying some growth stocks as well, and then holding those growth stocks and not being so concerned about the daily movement of a stock. People who are DMing me today on TikTok are going, hey, I bought Apple at 145 and it's 118 now. Do I sell it? And I think, like, no, of course it's Apple, dude. Like, why would you sell it? You would just buy more. Don't cut your losses on a stock like Apple. Cut your losses on some random garbage penny stock. That's where you cut your losses, not on your high quality long-term investments. You hold those forever. And when they do pull down because of maybe a bad earnings or a bad economy or whatever the reason, you usually, after reading the news and coming to a conclusion that it's not the end of that company, consider buying more. So that's the answer to your question. I hope it was helpful. And if you haven't done so already, please subscribe, and follow me on TikTok for some Stock Leprechaun videos. Have a good day.